Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host who hasn't been here for a while, but he's here today, Mark Hanf of Pacific Private Money. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. The certificates are not sponsored by the radio station, but by Tambella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And those certificates are each worth over $100, so you're definitely going to want to call in and answer the trivia questions at commercial break. Today's trivia theme is miscellaneous trivia. Today we have a special guest who has been on our show before. Just got back from one of his events. Richard Wilson of the Family Office Club. Let me give before we say actually hello to you, let me give a quick little bio. Richard's a third-generation Eagle Scout, husband and father of 3 living in Scottsdale, Arizona. Used to be in Florida, now he's in Arizona. CEO and founder of the Family Office Club, which is the #1 largest association of over 3,000 registered ultra-wealthy families and their family offices. Richard's helped create and formalize 100+ family offices and counts from Shark Tank, several billionaires, many REITs, et cetera, as part of his organization. And he's also got the website billionaires.com. You'll talk a little bit about that. Richard, welcome to The Best of Investing.
Yeah, thanks for having me here, guys.
Absolutely.
Hey, Richard, so I know you also, in addition to all the amazing services you provide for people who have family offices and for people who are looking to work with family offices, you're also an avid real estate investor. And since this is at Best of Investing, we tend to talk a lot about real estate here. Where are you seeing the real estate opportunities coming up this year?
Yeah, so most people do believe the market will get a bit worse, but I think 70% of investors right now are sitting on their hands, and the number of listings on the market's going up, the number of closings going down. So what we're doing is looking at 100 deals a month and then just closing on the ones that meet our metrics, but also are giving us a 20 to 33% discount off their list price. And those are the ones that we're pulling the trigger on. So we closed on a property today that's it's called the Jurassic Retreat. It's like a Jurassic Park-like themed property just outside of Vancouver, Washington. We put a property under contract the day after Christmas on the ocean in Florida. So we're seeing a lot of opportunities out there.
So is that one of the things the services you provide for your clients is the ability to co-invest along with you in real estate?
Yeah, it's basically 3 simple things. 1, we listen to our clients. If they like dry cleaners or stem cell therapy centers, we'll help them navigate that. 2, we like medical practices that make money. And then 3 is we like short-term rental properties. And so we really try to focus on those 3 areas only.
Well, and then you bring up a good point, because when people talk about the real estate market, or when the media talks about the real estate market, and so this is terrestrial radio, a lot of our listeners are people who read, the local media and, oh, real estate is down, but they're really talking about residential, right? Single family homes. Like, my house is probably not worth today what it was a year ago. Well, boo-hoo, I'm not going to sell, right? But when you talk about real estate and investments, the broad spectrum of real estate, in fact, the vast majority of real estate investing goes on in commercial or commercial related or multifamily type of real estate, apartment buildings, subdivisions, development, that type of stuff. So, notwithstanding what's happening in residential real estate, and that some of our home values are going down or have already gone down and may go down some more, there's real estate opportunities today in the commercial space and in the multifamily space that haven't necessarily seen much of a decline. Or if they're declining, you're there looking for the opportunity, maybe the distressed seller who has issues elsewhere in his life and needs to sell his real estate, and you're there happy to make him an offer.
Right, exactly. Like our last property was put under contract. It's from a 70-year-old. It's their only Airbnb property, and she was ready to retire. So right place, right time. Financials are all messy. Yeah. And Joe Williams is the founder of Keller Williams. He spoke at our event last month, and he said that there's no such thing as a bad real estate market. It's either a good market to buy in or it's a good market to sell in, and there's always opportunities. And if you know your niche and how to force appreciation and add value, then it's just different types of markets.
Well, that's exactly true for us, in the alternative lending space. So, you know, at our company, Pacific Private Money, which we built this show around to promote to, you know, the greater San Francisco Bay Area where the station airs, you know, we really serve both our borrower clients who are looking for ready access to capital, and they're not going to get it from banks, thanks to Dodd-Frank and a number of other things that have happened over the years. And then we have investor clients who love real estate, but you know, maybe it's overpriced, or maybe they're nervous that real estate prices are going down. Well, you could still invest in real estate debt all day long. So
right.
we agree with that. There really is no such thing as a bad real estate market, because as Edward and I were even talking about this morning, the demand for capital, our deal flow, our loan requests are crazy. They're off the charts. We can't raise money. We can't raise new money fast enough to keep pace with the loan demand. So, you know, according to a lot of people right now, the real estate market's not bad at all. The real estate market is presenting all kinds of opportunities for those who are sharp enough to take advantage of them.
Hey, when we come back, we're going to come back from a break, and I want to make some comments specifically about that. All right. Here is our first trivia question, talking miscellaneous trivia. Which presidents signed the Declaration of Independence? Which presidents signed the Declaration of Independence?
There was more than one?
There was more than one, yes.
Okay.
More than one and less than three. All right.
Okay.
All right. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate from Tan Bella Tanning Salon, again, which is worth over $100. Nice little gift there. 888-912-1190. Trivia question is, which presidents signed the Declaration of Independence? Stay with us. You're listening to The Best of Investing with Edward Brown, Mark Hanf, and our special guest, Richard Wilson. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, our special guest, Richard Wilson of the Family Office Club. Our first trivia question, which presidents signed the Declaration of Independence? Now you can answer, guys.
Was John Adams one of them?
Yes, he was.
All right.
And?
Richard, got a good guess?
Thomas
I'll leave
Jefferson.
that to you, Mark.
Jefferson, okay.
Thomas Jefferson. Those are the two.
I know we should be ashamed of ourselves for not knowing that, right? That's good.
Yeah.
That's okay. I got the second question will be, well, I don't know. We'll see how you guys do. Okay. So we were talking about the fact that Pacific Private Money has a huge loan demand.
Yeah.
I'm going to kind of interject here a little bit. First of all, a lot of people, have been saying, well, people are canceling their purchase contracts, et cetera. The volume's gone down. Prices haven't necessarily fallen off the cliff or anything, but it seems like a lot of the larger mortgage companies have laid off a lot of people because there's very little refinance going on. I mean, I'm a perfect example. I refinanced during COVID, and I'm locked in at 1.99% for 15 years. So, I mean, I'm not going to refinance, right? And if I sell my house, I'm going to have to go, oh gosh, I got to go get a new loan at 5 or 6%. So that's the volume that's kind of drying up, right?
Yeah.
But because a lot of big mortgage companies have laid off a lot of their employees, what ends up happening is Pacific Private Money has become a bigger fish in a smaller pond. So there's not that many, and a lot of the banks have kind of pulled back. They've curtailed some of their lending. That's one of the reasons also why Pacific Private Money has been so busy. And that's all I got to say. And as Forrest Gump says,
so Richard,
that's all I got to say about it.
So Richard, billionaires.com. I share with the audience the story of how you acquired that and how you're leveraging that amazing URL.
Yeah, sure. So October 2009, I started trying to buy it, and it took me 12 years of following up every 2 to 4 months until they broke down. They wanted 1.2 million for it for over a decade, and then during COVID, they broke down and gave it to me for a little bit under $500,000. And now what we're trying to do is, it's funny, there's so many books out there, and let's say you're trying to learn how to play basketball. You could read all these books by college basketball players that are pretty good at basketball, or you could read a book from Michael Jordan or an MVP in the NBA or someone who's, like LeBron, Kobe type, right? Yeah. And it's similar to going on Amazon to buy a book. It's you could read all these books from business people who are very smart, but if you haven't read every book from the billionaires, maybe you should start there and read the books from the billionaires, right? So what we're trying to do is interview 100 billionaires, but then we also have some of them speak at our conferences. And then we also feature some videos of like Michael Jordan, Jay-Z, et cetera, on billionaires.com. So if you want to stream insights from billionaires, you can go for free to billionaires.com. And then as we get to our 100th billionaire interview, we'll have 300 insights from 100 billionaires, because we're asking each billionaire just 3 questions, non-invasive questions over email. And we're collecting all these billionaire insights and publishing them.
So for those who want to be a billionaire, what better place to start? Now, one of your original companies, Richard, was FamilyOfficeClub.com, Family Office Club.
Right.
And I've been a member there for, I think it's been over 5 years now. And amazing resources that you provide for the monthly fee that you charge. I've been a happy member of that. Plus, I get to attend all your events for the price of the monthly membership. How has that grown for you in the last few years?
Yeah, it's been great. So we do 15 live events a year. You can see what we're up to at FamilyOffices.com. It's one price per year, and you get 15 live events plus an investor portal, and we review your materials, et cetera. Every quarter, we do a 700 to 1,000 person event with 75 to 150 speakers on stage. And then every quarter, we do some workshops on setting up a family office or structuring deals or raising capital. And so it's been a lot of fun. And the secret to our business has been that we're not in the conference business, we're in the community building business. So it's really an investor club community. And the byproducts is a whole bunch of deal flow and a whole bunch of new strategies and structures. So we take those byproducts and create some soup with it and get great things done with clients and develop our medical practice and Airbnb sides.
So just to make sure, you said family offices, plural, familyoffices.com.
Right.
Do you still have familyofficeclub.com? Is that still I think that's.
I don't know if we have that.
So many URLs, but
yeah.
I didn't want to misspeak. And I know you're.
I'm sure if you do Family Office Club, you'll find.
You will
absolutely.
If you Google
on
Family
Google,
Office
easily
Club.
found there. Yeah, and actually, we just came out with a new resource last week. We took the time to record 14 modules for anyone looking to start their own family office, and it's free to access on YouTube. And it's a 14 module mini series on how to create a family office. And you can find that for free on our YouTube channel, just in case anyone's listening and they're a private investor. That's probably like the most valuable thing per minute we can give to someone, and it doesn't cost anything to kind of get to know us.
What are some of the events that you have that, our listeners who are real estate investors, and real estate investors are always looking for equity partners, right? And which of your events are good for someone looking to break in and in search of equity partners? Which one of your events would be good for them to attend?
The sexy ones that attract everybody are our quarterly investor summits. That's what everyone wants to sign up for and come to. And it's like, in their mind, that's where the fish are, right? They're like, oh, we need to go and find an equity partner, right? And that can be great. And you can learn a ton from 75 or 130 speakers on stage in 2 or 3 days, of course. But teaching somebody how to fish and what bait to use and how to add value to those fish and how to attract them instead of chase them is worth so much more than, oh, here's a couple of fish in a room and you can hear the fish talking on stage, in my mind. And so our workshops are really, I think, where all the value is. But people have it completely opposite, and they come for the sexy, I want to hear from the investors and meet one today, and I don't care about strategies, just get me in front of an investor, right? So depends who you ask on where the value is.
Well, and you were kind enough to invite me, I think it was in 2018, to speak at one of your events on secrets for capital raising. And
right.
you invited me after I told you that I'd raised, a couple $100 million from private investors to fund the loans we make with Pacific Private Money. But I was really fortunate and appreciative of the invite. But there were some amazing speakers there, and it's what's great about that event is that people want to share their secrets, right? People love to give, and people give to get. And so when you attend one of your events like that, it's just a great way to learn little nuggets. It only takes one little nugget of information that can really change your life.
Yeah. If you go deep on specialized knowledge in the capital raising niche, it's worth a lot for sure.
Yeah.
Okay, we're gonna cut to our second commercial break here, and when we come back, I'm going to sell Richard trillionaires.com, and then even less quadrillionaires.com. Okay, second trivia question is, what is the best-selling Christmas single of all time?
Oh.
Call 888-912-1190. First caller with the correct answer is going to win the tanning certificate, which again is worth over $100. What is the best-selling Christmas single of all time? All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing one more time. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and our special guest, Richard Wilson of Family Office Club. Second trivia question. What is the best-selling Christmas single of all time?
White Christmas?
Yes. Very good. I thought you were going to say Grandma Got Run Over by a Reindeer, but no. Yeah, White Christmas by Bing Crosby. Very good. All right. So far you're batting 500. Go ahead, Mark. You're going to ask.
Yeah. So Richard, you have an amazing business model where you get to rub shoulders with, billionaires, centimillionaires and billionaires, and what have you picked up? What have you learned? What are they doing, in terms of their particular investment strategies? What are some of the secrets that you've been able to glean? And I know a lot of this stuff is available on your website for members, which is amazing. I've watched, many of your interviews and your videos. Some of them short, some of them long. All of them very informative. What are you finding? Now post COVID, how are some of those families, directing their investment activities?
Sure. Well, there's probably 15 or 20 experts on the equity side for how many experts are on the debt side. And I do know some of the smartest, sophisticated families do play on the debt side of the balance sheet because of the security you have there. So I was going to mention that before the last break. So I wanted to make sure I mention that.
Yeah.
On the strategies we try to emulate and we identify, one of them is to acquire strategic choke points in an industry. So once you acquire that choke point or build it, now you have an advantage and things go faster, right? Like a choke point could be having a popular radio show or buying billionaires.com or writing the #1 book on a very specific niche. And so acquiring those choke points will help you just get more momentum. And then the next choke point gets acquired that much easier. And eventually, like in Jim Collins' book, Good to Great, he talks about the flywheel turning over. Eventually that flywheel is turning so fast that it's really hard to slow down all the momentum you have because of all those choke points that you've acquired over time. So I think that's probably like the #1 most powerful thing. And then the other thing is that the most successful families, they focus on just 1 to 3 games and they get really good at playing those 1 to 3 games. And that could be like our medical clinic capital division is only investing in profitable multi-location medical practices that are already doing very well. And then our other division is focusing on short-term rental properties. Like we're not going into 19 niches and trying to get good in 19 areas. So you need to trust experts to invest passively in different areas. You need to have a family office quality and insurance advisor, wealth advisor, et cetera. But then just choose 1 to 3 areas where you're going to play offense and really go deep and be really good at playing those couple of games.
Yeah. And you mentioned, the debt versus equity, and just to help the audience explain what that is. So when I attend, Richard's events and I'm looking to rub shoulders with decision makers who have access to capital, I'm selling debt. I'm selling, I create mortgage debt as an instrument to create return. So our Freedom Fund, for example, which we fund loans that we generally will sell to third parties, we're paying 9% on deposits over $1 million there, and it's secured by real estate debt. I've got a construction lending fund that's a little bit more long-term. It's paying about 10% right now, but again, secured by construction loans. What I learned when I attended your events early on was that many of the people that I met there, they're really interested, that the families they're representing and the decision makers they're representing, they want to own real estate. They want to own businesses. Yes, they'll take a portion of their wealth and invest in debt because they want to diversify. But really, if you're a real estate investor and if you're really good at identifying, multifamily opportunities or what have you, wherever your niche is in real estate, family offices, there are family offices that's they want to invest in your talents and they will provide capital. They like to own real estate.
Right. Yeah, for sure they do. And many times, like right now, we're setting up family offices for a couple dozen families that are worth, $30 million to $300 or $400 million. And many times the very first step is to figure out what are your goals, objectives, what's your mission, what are your values, then we develop a roadmap on how to get there. And sometimes a lot of debt makes sense, like debt type investments. Sometimes it's a lot of equity. A lot of times it's upgrading different components and then designing a new direct investment strategy for them. So it kind of depends on where the family wants to go and who they are. But a lot of families just don't come equipped with how to navigate debt markets or how to get access to debt investments. There's not as many experts out there doing what you guys do as compared to the multifamily syndicators, which there's 10 million of, right?
Well, I'll tell you, as a high net worth individual myself, I like investing in debt. I mean, I've owned real estate. I still own a little bit, but I like debt because it's like coupon clipping. And then if something goes wrong, well, guess what? I get to foreclose at, now I get the property at 60 cents on the dollar, rather than 100 cents. So it's definitely got its advantages. And I ended up having a situation where I had some live work units, and I ended up selling them because I had a tenant. Have you ever saw the movie Pacific Heights with Michael Keaton?
Oh,
He had
yeah.
a tenant who was just like that. And I said, you know what? Who needs? Life is too short to have this kind of problem. So it was a lot easier to sell, pay my taxes, and move on and just invest in debt.
Yeah.
Yeah. By the way, all of Mark's funds, because they're pass-through entities, all qualify for QBID, which is the qualified business income deduction. Gives basically you don't have to pay tax if you qualify. If your income qualifies, you don't have to pay taxes on 100% of the money that they pay out, just 80%. We're going to get one more break. When we come back, I do have an email question for Mark that I did want to ask, which is, that came in from a listener. It says, why do they have more than one fund? You think that everything would just fall into one fund, but that's going to be the question we're going to ask Mark when we get back.
All right.
Here's our third trivia question. What U.S. state has the longest freshwater shoreline? What state has the longest freshwater shoreline? Mark's looking up at the ceiling, left eye. That means he's thinking. Call 888-912-1190 to answer this question. Again, you'll win the tanning certificate, which is worth over $100. And with the weather the way it is, it's a little cold and windy and rainy. You want to get your tan on so that when the springtime comes, you're all set. What state has the longest freshwater shoreline? 888-912-1190. Don't touch that dial. The Best of Investing. I'll be right back. Welcome back to the Best of Investing. Edward Brown, Mark Hanf, and our special guest Richard Wilson are all here. The third trivia question: what U.S. state has the longest freshwater shoreline?
I'm going to guess Michigan.
Yes.
Yeah.
Holy smokes! Mark doesn't usually do this well. He wanted to impress you, Richard. 2 out of 3.
I've been working on my trivia for the last 3 months since I've been on the show.
That's why you haven't been on. You've been reading encyclopedias, freshening up on it. Okay. So, Mark, an email comes in from a listener that says, why does Pacific Private Money have more than one fund?
It's funny. I actually was talking to another private lender who asked me the same thing. And it's actually a pretty simple reason. Some companies will have just one big fund and they make all of their various loans out of that fund. But we have 3 in particular that have different business models and different risk profiles. And what we've learned over talking to thousands of high net worth individuals, accredited investors, most of them here in the Bay Area and most of them in California, is that they all have different appetites. So, for example, we have a construction lending fund. Now, some may say, "Oh, construction loans, well, that's risky." Well, it's riskier, but it's still secured by real estate. And if you have a good team of people who know how to analyze construction loans, and you've got a good team of people who can underwrite and then manage, and you've got inspections and all that in a draw process, our construction loan fund has been paying out 10% annualized on a quarterly basis for the last 2.5 years. So it's very successful and it's very conservatively run. Then we've got a rather passive, and in fact, it's our most conservative fund, is the fund that we use to buy performing and non-performing notes at steep discounts. That one's based in Texas. We call it the Pacific Southwest Fund. And that one's paying a fixed rate of 8%. So it's a fixed rate fund. And it's secured by mortgages that have an average of below 50% loan to value, because they're performing mortgages that are somewhere in between, maybe they're 5 or 10 or 15 years in on a 25 or 30-year term. They've been paid down. The value of the real estate's gone up. So again, fairly conservative. And then we have another fund that we use like a funding line of credit. That's our Freedom Fund, the Pacific Freedom Fund, and we pay up to 9% to basically, rent your money, and it's designed to act or behave kind of like a money market account, although it's not technically, it's definitely not a money market account. It's not insured, but it does, again, it's secured by loans that we make that we're going to then sell. And so we revolve that capital monthly. And as a result, we promise our investors that, hey, we'll, for $1 million or higher deposit, we'll pay you 9% and give us a 30-day notice, and we'll be able to liquidate your funds. So it's really good for people who want to keep their powder dry and they'd love to get a high yield, and it's secured by real estate mortgages. So all three of those funds are secured by real estate mortgages. Is that two of them are longer term plays. One is a slightly higher yield for those who really want to stretch and they want to, they would prefer a 10% to a 9 or an 8. But it's just, we like having different, almost like a divisional strategy in our network, so that, no matter what kind of investor you are, if you understand and appreciate the value, safety, and security of mortgage secured debt, you can kind of pick your pick from the menu.
But also it serves the borrowers too, because if you have a fund that is focused on one specific thing, and some borrower comes to you with a fantastic construction loan fund or construction loan request, you don't want to necessarily say no. Say, but wait a minute, over here we have this fund that specializes in construction loans, and see if it's an appropriate loan for that.
Yeah. So it's nice. And then, and then at the end of the day, we even have people who call us up and say, well, I'd really like to invest in individual notes. And that used to be the hallmark of how we ran our business 10 years ago before we started our first fund. And now, 6 funds later, we've got a nice menu of investment options, but there are people there that they want to have their name on that one note. And so that's another way. And we can work with investors who like that as well. So again, for more information, always go to our websites, pacificprivatemoney.com, all one word, of course, pacificprivatemoney.com. You can see our family of funds, and we're happy to send you a prospectus. We've got flyers, we've got all kinds of goodies that we can send you. And at the end of the day, we love to get on the phone with our prospective clients and talk about real estate. I love to talk about real estate. If I'm not spending 80% of my time talking to prospective investors, I'm wasting my time, because that's the favorite thing I do every week is that. So Richard, I know we got a few more minutes left in this segment. What's the thing that you're doing? I know you're doing a lot of different things at billionaires.com and familyoffices.com. What's the thing that's got you the most excited right now?
Right now, I think it's the unusual topic of helping my wealthiest clients invest in their health, because they don't really expect it. And they've gone their whole life, and none of their wealth managers barely even talk about direct investments or how to set up a family office, but they never talk about investing in their health, really. And so we're coming up with 30 different ways to invest in your health. And all those 30 ways, I'm doing them first before providing them to my clients. And if I don't like it, then I don't put it on the list. Mm-hmm. But all different ways to prevent them from getting sick, to feel better, to basically, if you don't invest in your health, none of your other investments matter. And if you die early, you're going to get taxed a lot, and it's not going to be good, right? And your family would rather you be alive and be energetic and having fun than being worth just a little bit more. And so I'm trying to operate in the assumption that by being ultra healthy, it'll actually propel me to be ultra wealthy instead of trade off of one to the other.
Yeah. I love that. I mean, I love work. I can sit and watch it for hours. No, but seriously, I Sunday night, I actually, get a little antsy because I like going to work, because people say, well, right, why don't you retire? I said, what am I going to do? Play golf every day? I mean, the average person dies like within 5 years of retirement if they don't have purpose. Right. So, I mean, I love working with Mark and
true entrepreneurs never retire anyway. And Richard, what you're talking about is actually one of the biggest growth industries right now. And I love following people like Peter Diamandis and others who, in fact, the organizations that we belong to, they're big proponents of the ever growing industries, stem cell research, nutrients to reverse aging. I mean, that technology, I love what Peter says, if you could avoid dying from something stupid in the next 20 years, you may be able to add, 2 years to your life for every additional year you live. So it's
keep the stress down. Keep the stress down. I mean, my dad died at age 53 of a heart attack in the office. No exercise, bad diet, stress, a little bit overweight, and smoked. Didn't drink or do drugs. Those are the only 2 things he didn't do.
He may as well have.
What's that?
He may as well have.
Yeah, I know, exactly. Okay, we're gonna cut to. We don't have a commercial. Excuse me. We don't have a trivia question. We are going to cut to our last commercial break. We're going to have a few minutes afterward in the next segment. I do want to ask Richard about what Mark Cuban had to say, because that's pretty interesting. Stay with us. Best of Investing. We'll be right back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf and our special guest, Richard Wilson. No trivia question, but I did want to ask Richard, you did interview Mark Cuban. That must have been interesting. I know you don't bombard these billionaires with questions because you want them to have a nice flow with you. What did you ask him? What was his answers?
Well, it's funny is it took me 13 attempts, and then on the 14th attempt, he answered my interview question. So it took about a year to get his attention. But yeah, the most important thing he said is that, especially because of how he's portrayed in the media, he said that you don't need to be a jerk to be successful in business, and nobody's going to want to work for you if you don't allow them to participate in profits or equity or upside or pay them handsomely. And so he said it's by treating people really well around you that you build a loyal team that's really going to take you far, versus being like super harsh on people and just being like a mean person in general. And I think because of who he is, it was really interesting that he said that, of all people, because he comes across as relatively in your face, harsh, or he'll be pretty direct with people in Shark Tank, or see him on the sidelines of a basketball game yelling or something, right? So that was the most impactful thing I think I got from his interview.
Well, I tried 13 times with him, and it was only after I got a restraining order that I said I had to quit. But go ahead, Mark.
I was just going to say, I'm surprised to hear that, Richard. I wouldn't have guessed that either. And I wholeheartedly subscribe to that. Now, the danger of that is that, when you joint venture with people and you give them an profit opportunity, that the hardest part in that is just, you don't always end up with the person you thought you were starting out with. And
right.
You really have to surround yourself with people that you know and trust. And when the first sign of something going amiss starts to happen, you need to take action, because I think, all 3 of us on this have probably lost money and had some, scenarios with partners and others that didn't turn out. I'm still dealing with a few myself, and it's part of life, right? And but I'd rather be the way I am and be trusting and be generous and be a giver. There's takers out there, and we just have to avoid those guys. But it takes practice, and you have to have a good gatekeepers around you to warn you in advance.
Yeah, for sure.
It's interesting because, I've been working with Mark Hanf. We started the radio show back in 2010.
Yeah.
We started doing business together in 2013. And I found that he was like, and again, you always kind of a little bit in the beginning, kind of knowing who you're dealing with.
Yeah.
And I'm a little bit guarded. But once Mark really is who, what you see is what you get, and he is generous, it makes me want to give to him. So I'm not the guy who takes advantage of the person. I'm the guy who says, "Oh, you're going to be nice to me? Well, then what can I do to bless you?" That's kind of my attitude.
We've had a great relationship these 12 plus 13 years now, 13 years now, and we're a month apart in age, which is fun. I'm the old man.
He's the old man. He's a month older than I am. Yes.
Yeah, I know that when I meet so many people, thousands of people per quarter through our conferences, if I can tell someone's really genuine and nice, I'll go out of my way to help them, versus everybody else who comes at me and they're stressed out, or they're rude, or they follow up 9 times in a day. And last year we had 4,000 people pitch us deals, and all of them would like me to be their commission-only salesperson and help them raise capital and stuff. I just can't do that, right?
Yeah.
But 1 out of 4,000 broke through, and they had a really unique strategy. And they're really nice people. They happen to both be Eagle Scouts, and I'm an Eagle Scout. And we had a lot of value things in common. I said, all right, let's have breakfast for 3 hours. And I did background checks on them, and I checked references. And it was the only group out of 4,000 we ended up working with more closely. And it was because of who they were as people. And that's why I appreciate being on your show. And just, I don't want to work with anyone who's just like super intense or I don't know, just weird,
Life's
right?
too short for that. Richard Wilson, Family Office Club. Thanks for joining us. Yeah, my assistant, actually, she's been working with me for 30 years. In fact, she would not, I tried to give her a Christmas bonus. She wouldn't take it. I mean, she worked so hard. I literally have to tell her, stop working so hard. I'm not kidding about that. All right, we're going to cut down to our thoughts for the day. What was Forrest Gump's email password? One Forrest one. I thought that was kind of cute. And you know what I don't like about Christmas parties, office Christmas parties, is looking for a job the next day. All right, tune in next week to the Best of Investing. But I didn't get any response from you guys, All right, that's a joke, obviously. Okay, tune in next week to the Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.